by some estimates, it's going to have caused $70 billion worth of damage, Hurricane Sandy. Now, unfortunately, no surprise here, but the insurance companies are trying every trick in the book to basically weasel their way out of paying for things that they're contractually obligated to pay for. Maybe. Now that's where the case gets a little bit deeper and a little bit murkier, but let's dive into it and discuss basically what's going on here. So there's plenty of people in New York and New Jersey that had hurricane insurance, and when Sandy hit, we covered a story just, I think, a couple days after Sandy, where we were talking about how these insurance companies had hidden in the fine print something called a hurricane deductible. And a hurricane deductible is not like your normal deductible, which I already think is pretty fucked up. You know, after you get into a car accident, they say, alright, yeah, so we're totally going to cover it, except that you have to cover the first, like, $500 or $1,000. Yeah, but wait a second, if I'm paying you every month, like $130, $150, and then something happens, why shouldn't you cover the whole thing? Because you know how they draft the contracts. They draft the contracts to be as weaselly as humanly possible so they can cover as little as humanly possible and, you know, make you pick up pretty much as much of the tab as legally allowed. Now, I understand that that's how for-profit business works, and I get it. You guys know I'm a capitalist. I've talked about that extensively. But the fact of the matter is, when you contract with somebody to cover you for insurance, and then they don't insure you when something happens, we have an issue. But instead, let me stop getting sidetracked here and focus particularly on what's going on with Sandy. So we covered the hurricane insurance and how the deductibles were like 5% or 10% deductibles. Now, if your whole house gets trashed, property value in New York and New Jersey is pretty goddamn high. So you're looking at, you know, 5% or 10% of $400,000, also known as an amount of money that people don't just have laying around. So, as if the hurricane deductibles weren't bad enough, what the insurance companies are doing now is they're bringing together their tremendous legal teams to try to find ways to not pay out the payments that they should pay out to the people whose houses got destroyed. So now their argument is this: oh yeah, you guys all had hurricane insurance, but here's the thing, it wasn't really the hurricane per se that destroyed your house and ruined it, it was the flood. So you didn't purchase hurricane insurance and flood insurance, so, you know, we're not going to pay you. Now think about that. Think about, that's like saying, well, yeah, you have flood insurance as well, but your flood insurance only covers flood levels that go up to 7 feet and 3.5 inches, and yours was actually less than that, and it didn't cover that particular number of feet. I mean, the way that these people look for little loopholes to work around to not do what they were hired to do is absolutely mind-boggling, and I have never in my life seen a better argument for, say, an independent third party that's objective that can step in and say, well, hold on one second here. You know, you need to cover this in good faith. Let's call this thing government.